Welcome to the Power Hour, the Heritage Quarter Business Alliance weekly webinar series. My name is Dan Mulka, and I'm joined by our guest, Lana Thompson. She works with BMO Harris, and we're going to have her talk a little bit about health savings accounts. It's a perfect topic to discuss. It's very, it's a great time to discuss it, just as businesses are trying to find benefits and different things to help keep people. I would say, Lana, why don't you tell us a little bit about yourself, and then what we can do is kind of go ahead and start with the presentation.
Great. Yes, as Dan said, my name is Lana Thompson, and I'm with BMO Harris Bank, and I run a financial wellness program. And part of that financial wellness is the health savings account. We're one of the only banks in the country that has a health savings account. And what we have found are many businesses are moving in that direction. Not only is the high deductible health care plan that the HSA is the companion account to, not only is that usually more cost effective for the business, but individuals, once they learn about the health savings account and the control they have over their own health benefits, it's becoming extremely popular. And so this is very timely because many businesses are running open enrollment right now. If you are not running open enrollment, it's still a great time to be looking at this. So let's get right into the presentation. And we'll start with our first slide.
Yep, and we are up and running.
Yeah, I can see the presentation on the screen. So Dan, hit me with the next slide.
Let's try that button. There we go.
Okay, so first of all, what's a health savings account? Well, as I said, it's the companion to a high deductible health care plan that's HSA eligible. Now, what makes the health savings account different from some of the other things? So you might have heard of flex spending account. Well, a flex spending account, it's one of those where if you don't use it, you lose it. With a health savings account, you never lose it. So first of all, the balances roll over from year to year. This is money that it's going to be yours forever. So triple tax advantage, contributions you make come off your payroll before tax. Whatever you earn in the HSA account is earned tax-free. When you withdraw to pay for qualified medical expenses, that's tax-free. So it's almost like a 401k for your healthcare. But with the 401k, think about it, when we remove that money later on in retirement, we pay tax on it. With the HSA, you never pay tax on those funds. As I said, balances roll over from year to year. So there is a limit. So for the fiscal 2022 limit, it's $3,650 for an individual plan, $7,300 for a family plan, and an extra $1,000 if you are 55 or older. So those balances are going to roll over if you don't use them. Remember, if you leave the employment where you're paying the high deductible healthcare plan, you still own those HSA funds and you can still use them for qualified medical expense. Let's say you retire, same thing. You can add a beneficiary to the account. So if you do pass away and there's still funds in that account, it would go to your beneficiary. So the funds never expire, they roll over. You can always use them for qualified medical expenses. If you're no longer part of the high deductible plan, you can't ever add more funds to it if you're no longer paying that premium, but those funds are always yours. So next slide. So the advantages of an HSA, we've sort of talked about some of them. The tax-free contributions, funds never expire. You're paying tax-free monies for out-of-pocket healthcare expenses. They can be invested and earn capital gains tax-free within the health savings account. Of course, this is paired with a qualified health plan. So let's look at our next slide. Okay, so I often get asked, what's a qualified medical expense? Well, you can go to the IRS website and they have a complete list, but I'm going to tell you almost anything that you can think of in the healthcare space. So here on this slide, x-rays, chiropractor, prescriptions, MRIs, contact lenses, lab work, dental, physical therapy. So what you're seeing there is doctor, eye care, and dental as well, and chiropractic. Now, let's think of simple things. Band-Aids, HSA eligible. Pain medication, whether it's over the counter or a prescription. A brace that you might need because your knee is sore. Anything that's within the healthcare family is going to be covered. And like I said, you can get that complete list. Now, one of the great things about the HSA account I'm going to talk to you about is that HSA debit card actually has a bit of its own brain. So if you do try and use it for something that's not eligible, it's not going to allow that. So all of our retailers out there now in the country, anything that's HSA eligible has a particular code on it that identifies it as being HSA eligible.
And I noticed too that, like, for example, I'd go to a Target or a Walgreens or something like that. You sometimes actually see a little star on your receipt saying HSA eligible, HSA eligible. So it's interesting that the card that you're going to talk about is actually smart enough to realize that. It's a thing I would have never even thought about.
Yeah, and Target is one of those retailers that has been doing this. And as I go into the presentation, I'm going to talk about something that ties that together. So thank you for throwing that in. So next slide. Not all HSAs are created equal. And so right now, I'm going to talk about if you are a business and you want to offer your employees an employer-sponsored healthcare plan. Now, employer-sponsored does not mean that you're going to make a contribution or that you're going to do a match, but that you as the employer are going to help to control all of the HSA accounts for your individuals. BMO Harris Bank has now joined a partnership with a company called Lively. So it's BMO HSA with Lively. Now, BMO we could have built our own platform for HSAs, and we have some existing HSA accounts under BMO that will be moving to Lively. But what we decided was we'll either build the best or we'll go out there and partner with the best. So we partnered with Lively. Lively is the #1 rated HSA platform in the US, and now we have partnered with them. So if you're a company and you're interested in an employer-sponsored plan, well, what do you get with that? Well, you'd get a dedicated customer service person. Of course, you'd have me from BMO, but you'd also have somebody with Lively, because Lively is a paperless platform. So you'd have a dedicated customer service rep from Lively, and you'd have me from BMO. You'd have a comprehensive dashboard. Everything you would need is on that dashboard. You would know how many employees that you have in there. You would even be able to see information on how your employees are using their HSA accounts so that you can provide them with more education. Easy account opening. If you have a new employee, it's paperless. You upload their information. Automatically, their Lively account is open. you would receive the account number and routing number. The employee would get their debit card and an email giving them the information for their dashboard so that they could go in and have a look. You could do this with an individual employee, or you could do a batch upload. Let's say you're moving to a high deductible plan and you've got to upload a number of employees. So you'd be able to do that. Batch contribution. Now, right now, what a company might be doing, you might be doing separate ACH payments for each employee's contribution off every payroll. With Lively, there would only be one. So Lively would actually pull from the payroll the dollar amount that totals all of the contributions, and they would actually make all those contributions. So you might be saving money if you're paying for individual ACH withdrawals. The reporting for the company, easy to report the employee enrollment, the contributions, and just as easy, if an employee retires or leaves, you can take them off. There is a flat monthly fee for a company to use Lively, but we can talk about that because when we go through it, oftentimes it's a break even or the company is even saving money.
I was actually going to ask you about, I know some people might be listening and thinking, oh, I'm an entrepreneur, I don't have that many employees. Would this work as a one-person solo entrepreneur? Would they be eligible?
What a great question. Yes, and we do have a number of individuals who are sole proprietors who are out there looking for a health plan for themselves. And they tend to be gravitating to the high deductible plan because they can start putting money into that HSA. Because a very important point, remember I said you never lose those funds. So in retirement, you no longer have the business, you're going to have Medicare. This could be the monies that you have to go into retirement because you want to offset Medicare. I heard a scary statistic that for our lifetime in retirement, because the good news is we're living longer. The bad news is we're going to have more healthcare expenses as we live that long life after retirement, and that an individual could need up to $200,000 additional funds over and above what Medicare can provide. So to have an HSA for an entrepreneur who maybe will use those funds for today, maybe not, maybe they're thinking about those funds for today and maybe even for into retirement because they are an entrepreneur.
And the best time to start is now because, let the money work for you.
Okay, so we've talked about what's in it for the employer. What's in it for the employee? And if you're an employer that decides to go with the employee-sponsored plan, great. Employer-sponsored plan, great. But maybe you say, well, can I still get this for my employees, but I don't really want to control it from an employer standpoint. Well, let me tell you what your employees get either way. So again, not all HSAs are created equal. What do you get with Lively? Well, okay, fee-free, first of all, no fee for the Lively account for the employees. Remember I said it was paperless. Each employee gets their own dashboard. And what can they do on this dashboard? Well, they can see their balance. They can order a debit card. Let's say they get their initial debit card when they open the account, they need a new one. They need one for their spouse. They need one for their dependent children. Because remember with an HSA, even with a single plan, your spouse and dependent children are also covered for out-of-pocket expenses. So they could also have a debit card and the account holder can order that right off their dashboard. So the other thing they can do on their dashboard is have a deductible tracker. So how great is this? The employee can add their medical plan number. Lively could then track the deductible that they've used. This could be very important information for an individual, because once your deductible has all been paid, then any other medical expenses that you might know that you are going to need, that would be the time to do it, because your deductible is already paid. Once your deductible is paid for the year in a high deductible plan, everything else for that calendar year has no expenses for you. So this is a great thing to have on your individual dashboard. Now, I want to talk about what Dan talked about, the expense scout. So let's say you have your credit card that you use the most often for day-to-day things. You can attach that credit card. And if you should go to a retailer like Target and use that credit card for something that's HSA eligible, that you have not used your HSA to pay for that, you haven't used your HSA account, you used your credit card, your dashboard will identify for you all of the things that you have used your credit card for that could have been used on your HSA. So how do you reimburse yourself? Very easily. You're also going to attach a bank account to your Lively HSA account, and at any point in time, you can reimburse yourself. So if you forget your BMO HSA Lively debit card, you have an expense and you go, oh my gosh, I'm going to have to use my own account or my own credit card. No problem. You get back home, pull up your computer or pull it up on your phone and reimburse yourself.
Now, another question that I'm not going to admit that I apply for, but what if that account or that credit card happens to be through some other bank? And I'm looking way off in the distance to not admit anything.
Yeah, that's okay. Your Lively dashboard, although BMO is in partnership with Lively, your Lively dashboard is yours and your Lively account is yours, and any credit card or bank account that you attach, we of course hope it's BMO, but it doesn't have to be. But I would say great question.
My wife's cards are all BMO, so I can at least by law take credit for half of that.
Thank you. Now, the thing that I think is the best option about Lively is the investment, the ability to invest. Because let's think about it. If you are putting in the maximum every year, and let's say you're lucky enough to be a pretty healthy person, so you're going for your regular wellness check with your doctor, you're getting your once a year blood work done, and you're getting those once a year tests that you need, or your vaccines or whatever, you're actually not being charged out of pocket for those. So you may start to get some funds in that HSA. So if you could invest them and be making capital gains tax free and not paying a fee for your account, that would be great. Well, we've got that for you. Before we move to the next slide, I just want to say as well, if you're watching this, listening to this and thinking to yourself, oh gee, I'm not that technical. What if I get on this dashboard? I don't know what the heck I'm doing. What if I mess something up? Well, first of all, you can't really mess anything up because the dashboard is so easy. But if you need help, on the dashboard, there is the option to chat with somebody, and you're not chatting with a robot. You'd be chatting but with a live person, chatting by email or texting. But also there's a number that you can call, and Lively's longest wait time, if you call for help, is 45 seconds. 45 seconds is the longest you'd be on hold. And their average call, they tell me, is less than 2 minutes because their platform is just so easy. Someone has a question, they call, they get somebody on the phone, they can do a share screen, or they can say, hey, here's where I'm at, what do I do next? And they help out. So these calls are less than 2 minutes. And that just tells me how easy the platform is to use. So they're a knowledgeable and supportive team behind this Lively that we've partnered with. So on the next slide, let's look a little bit deeper at that investment access. So self-directed through TD Ameritrade, anything you can think of, stocks, bonds, mutual funds, and no fee whatsoever. And even if you don't think you are an investment guru, when you do make a purchase of mutual funds, and mutual funds are probably the most common investment in an HSA, because you're not putting how they say all your eggs in one basket, you're able to then answer some questions around the time horizon and around your knowledge, and actually being able to look at a portfolio of mutual funds that meet your risk tolerance and time horizon. So if you decide, hey, I want some growth, but I want safety, I want 50-50, you can do that. If you say, hey, I'm young and healthy, I want to go for a 70-30, 70 in growth and 30 in safety. Or, that moderate, which is a 60-40 split between equities at 60 and fixed income, which is safer at 40. But in any case, you've got those options, you control them, you can buy and sell at any time, because you're doing this all through your dashboard, and you are paying no fees to do that.
Now let's just say something catastrophic happens and you have to use all the funds in your account.
Yes.
Car accident, hospital bill, something like that.
Yes.
Now, is there any fees or penalties? Because, all of a sudden you have to liquidate any stocks or IRAs that you have, or is it kind of absorbed through Lively?
It's absorbed. What a fantastic question. Because what if you need those funds? Well, then you sell the investments. The only thing is, as we know with investments, when you sell investments, it might take 24 to 48 hours for those funds to actually move back into your account as cash. Let's not forget, though, the reimbursement option. So let's say catastrophic, it's a car accident, they want their money right now. And usually medical bills, we have that at least a 48-hour window. But let's just say for some reason, you've got to pay this instant. You can use your credit card, you can sell the investments, you can move them over, and you can reimburse yourself. All of this is done simply and with absolutely no fee. So you have that peace of mind. And I'm so glad that you asked that question, because you have that peace of mind of not needing to worry, well, how much should I leave in there in cash just in case I need it? And in some cases, having to leave some in cash is an actual requirement. So many of the HSA accounts say you must leave $1,000, you must leave $5,000 before you can begin investing. With Lively, you can invest every dollar. So that is a huge benefit, because you don't have to worry, because you've got the reimbursement. You're making your funds work for you to make your healthcare fund even healthier, even larger, and you're not paying any tax while this is happening. So how good is that? Now, I do want to say there may be some of you out there that go, I don't care how easy it is. I don't trust. I have absolutely no investment knowledge. I'm willing to pay a little bit to have an expert. You can have a guided portfolio through Devenir, where then your time horizon, your risk tolerance, all of that strongly matched. They're experts. They're doing the buying and selling for you. You do pay a 0.5% annual fee on the amount invested. And that's a really small fee for a guided portfolio. But you have the option free or 0.5% annual fee. So that's when we look at what 0.5% is, it's not a whole lot for that. And keeping in mind that you're not paying income tax on the rewards, on the capital gains.
And I'm sure too, and I don't know the stats to quote anything, but through most stocks, you're going to be making much more than that on your, the 0.5% is going to be just a small, minute part of that.
Yeah. And I will give up a little bit of my personal information here. So I've been in an HSA. Both my husband and I have been in an HSA account for 6 years. We have individual accounts. We have put our maximum that we're allowed to as individuals each year. We have used our HSA from time to time for different things, and with no hesitation. And we are in a moderate 60-40 portfolio, making approximately 10% a year. And between the two of us, we now have $40,000 in our HSA accounts. So that's just an example of, 6 years, we've put in the max. We have used our HSAs when we have needed to. Moderate portfolio, 10%. And that's what we have going on. So we have the peace of mind that we have plenty should we need it, and we can sell those investments should we need it today. But we're also thinking about that future when we have a little bit of a nest egg to offset the Medicare for out-of-pocket expenses. So it can absolutely work.
And the beautiful thing is December 31st, you don't have to spend it all every year.
Absolutely. And it's going to stay there. And we have beneficiaries should something happen to us. And we don't have to worry. That's tax-free. Anything we earn in that earning has been tax-free. So next slide. So requirements, and this should go without saying, but I always do like to talk about the eligibility requirements. So just to clarify, you must be paying into an HSA eligible qualified high deductible healthcare plan. I know working at a bank, we've had people walk in and say, hey, I've heard about these great HSA accounts. I'd like to open one. And they don't know if they're paying for a qualified plan or not. So they have to go back and find out. So you must be covered under a qualified high deductible healthcare plan. You can't be covered by another health plan as well. So you can't have another health plan that's not a high deductible plan. And, the government is giving us this great tax ability to save tax, but they want to make sure that, of course, the IRS needs to make sure that you're in the right plan. You're not enrolled for Medicare. So just to clarify, you can't open or you can't contribute to an HSA if you are with Medicare. You can own the HSA, you can use the HSA funds for eligible expenses, but you cannot add to it. I want to use another example here. I had a lady call me. Her husband, she is not part of a high deductible plan. She is not under a qualified high deductible plan. Her husband passed away and left her his health savings account. She wants to transfer that account to BMO HSA with Lively because she wants to invest those funds to build herself the nest egg for when she goes on to Medicare. Her question was, can I do this? The answer is yes. because she can open an HSA account through BMO HSA with Lively. She can, in her dashboard, do the transfer from the HSA account that was left to her into an HSA Lively account. She is going to be able to then, through her dashboard, invest and enjoy the fruits of those capital gains. She cannot add any more money to it. Now, when we do that transfer of the account from her deceased husband that is now in her name, when we move that account from where it is now to the BMO HSA with Lively, she is going to not contribute anymore. And when Lively does that transfer, they're going to ensure it's HSA to HSA. So the government knows this is not a contribution. These are HSA dollars to HSA dollars. She's going to be able to invest. She's not going to be able to contribute, but she's going to be able to invest, and she's going to be able to use those funds now and in the future for any out-of-pocket medical expenses that she experiences. Okay. So if you are in a flex spending account, you can't be in an HSA. That's a big one. Some people say, well, can I have an FSA and an HSA? No, you can't have both, because you're going to be in one plan or another. Now, you can't contribute to both, but if you had an HSA that you're no longer contributing to, but you're the owner of the HSA, you can continue to have it and to use it. But again, you cannot contribute more money to it. And I see I missed one. You're not eligible if you are claimed as a dependent on another individual's tax return, then you can't have your own HSA. Okay, let's move. So in 2021, you see here what the contribution limits were. And I talked about this earlier. For 2022, as you can see, it's $50 higher. Now, the government has been doing that every year since HSA started. So they every year you can sort of count on, there's probably going to be an increase. Every year so far, it's been a $50 increase. So for the 2022 year, the annual contribution is $65.50 for an individual plan, $7,300 for self, and a catch-up of $1,000 if you are 55 or older. So if you're 55 and it's an individual plan, then $46.50. If you're in a family plan and both you and your spouse are over 55, it can be $1,000 for each. So, or $1,000 for, even if you were the one that set up the family plan, but your spouse is over 55, they can have that top up as well. So one of the things about your Lively account as well, you can't mess up, because Lively makes sure you've said you're in the self plan. All of a sudden you're trying to do a contribution that's going to put you over the top. Nope, they won't let you do it. BMO HSA with Lively does not want you in trouble with the IRS. And just while we're talking about the IRS, you're provided any documentation that you need for your Lively account at tax time. Also, let's say you are listening to this and you go, yeah, but okay, the government says it can be after tax dollars, except my company doesn't have direct deposit for payroll. What do I do? You can then contribute after tax dollars, and then there is a different form that you use on your when you do your tax return, so you will get that back on your tax return. And your Lively dashboard can help you with that as well. Your Lively dashboard is not your accountant, but it's going to give you everything that you're going to need for IRS. You can also, if you have, let's say, you use your HSA and you don't, oftentimes we're using it for a prescription or right at the doctor's office, but you can also upload a receipt to your dashboard in the case of, it's a different receipt. You just want to make sure, in case you're ever audited, that you have all your receipts and you can have them all in one place on your Lively dashboard. Next slide.
There we go.
Okay, so distribution rules. Tax-free when used for qualified medical expenses. And remember, I said you can use it for out-of-pocket expenses for spouse and dependents. Tax implications vary by state. So if you were to mess up, now, as I said, Lively is going to stop you from making over contributions, and the BMO HSA debit card with Lively will not let you make a purchase that is not HSA eligible. I have heard a couple of horror stories from companies who say, oh my gosh, my employees had a debit card. They didn't understand how the HSA worked. And you know what? They went and bought beer using their HSA debit card, and now it's a mess. Well, your BMO HSA with Lively debit card's not going to let you do that. So, and I'll also add that your debit card, because it's not going to let you make those purchases that you shouldn't be making, because I'll just reiterate that retailers do have everything that you're going to buy with your debit card coded HSA eligible, and that's how you're able to use your debit card. So if you use your debit card, you're going to know right away this is an HSA expense. Otherwise, your card wouldn't let you do it. So hopefully with a BMO HSA with Lively, there'll be no need to worry about tax consequences, because you'll be following all the rules within the HSA. And especially if you have all your receipts in there, it's really going to help you out.
Now, a quick question. I just thought about that. And I'll be honest and say the beer question kind of inspired this. Let's say you go to like a Walgreens, for example, that maybe happens to sell beer, but you're also getting a prescription, 3 other things that qualify as HSA. Are you able to run, for example, 2 credit cards, your HSA card and another one? Or is this example where you save the receipt for a reimbursement at a later time?
Okay, so you would use your BMO HSA with Lively card to pay for the qualified things. You would use another card to pay for the beer, because it's going to decline the entire transaction because there's something in there that doesn't qualify. We just, there have been, like I said, there's been horror stories, and there have been accidents, not even meaning to do it. You've got your debit cards in your wallet, you pull out the wrong one. I've done it more the opposite way, where I'm at the dentist and they say, oh, it's an additional $24 for that filling you just got. And I pull out a debit card, that's my bank account. And then I get home and go, oh my gosh, why didn't I, because I'm thinking more doctor, not dentist. Mm-hmm. So I haven't used my debit card, so that you can make your reimbursement if you do that, but it won't let you do it the other way.
That makes sense.
And they won't let you do it the other way because what if, unfortunately, what if you don't have the money from your regular pay and you were just, an individual was just trying to slide something through while they were buying things that they knew were eligible.
That does make sense.
Next slide. Okay, so the advantages of working with BMO Harris for all of this. So we do have for your business, we have our Bank at Work, which I run, which is the financial wellness program for your employees. We also have, not everyone knows that BMO Harris also has what we call premier services. And that's the combination of a banker that's dedicated to you and a licensed financial advisor. And that's for people who have a little bit more funds and who are looking for a little bit more advice. Now, they may not have $1 million, but they may have 200,000. And we can provide that customized advice and that full financial plan. And then, of course, with somebody who is more affluent, who is looking for actual wealth services, we have that as well. Next slide. Okay, that's the end of the slide program. If you would pull up the HSA flyer. Now,
that'll be just 1 second while you do that. Sorry about that.
If you are a business owner and you've been listening to this and you want to try the employer sponsored, please reach out to me. And I'll make sure the Business Alliance has my information. If we could flip to the other flyer. What I want to show you is that if you are thinking, well, you know what, I'm just one person, so I don't need an employer sponsored plan because I'm just going to have my own HSA account. Then the flyer that I'm going to show on the screen now, and will be in the Business Alliance internet site, it has got a QR code on it, so you're able to actually with that flyer, hover over the QR code. It'll take you right to account opening, and you'll be opening your BMO HSA with Lively account. What will happen is you'll put some information in, and you'll be sent an email with how to access your new dashboard, and you'll be mailed your BMO HSA with Lively debit card. And then you want to go in and have a look at that dashboard and see what you're going to be working with. So this is the BMO HSA with Lively flyer for individual use. Now, keep in mind, if you are planning to go the employer sponsored route, if you're a business, then you won't use this because you'll upload the employees' accounts on your own. If you are self-employed, or if you're not going to use the employer sponsored and you just want your employees to be able to have an HSA, or you want an HSA, this flyer is going to be on the internet site. The QR code will take you immediately to BMO HSA delivered by Lively, and you can see what your debit card is going to look like when it comes to you. And you're going to then have access to all the benefits that I talked about. So this will be on the intranet site. And now, Dan, the other flyer. Now, virtually, of course, I can't bring donuts to a presentation, but I always say I don't bring donuts, I bring cash. So for all the members of the Heritage Corridor Business Alliance, this is a banking offer that BMO is extending to you. There is, again, the QR code on it. So if you want to take advantage of the offer, you can. And also, if you want to share this flyer with your employees, we're happy to have them join BMO. I want to point out a couple of things. So let's go with the 510. So I want $510. How do I get that? Well, if you're not currently a customer and you open a checking account with us, first of all, we're one of the only banks in the country with a fee-free checking account. So opening that fee-free checking account that has no minimum balance requirement, no number of transaction requirements, access to, of course, a debit card, but also to our online and mobile banking with Zelle, all free of charge. If you set up your direct deposit to the account, you can earn $200 bonus. So that's your first $200 bonus. Now, when COVID hit, we realized, a lot of people did not have that all-important emergency savings fund. We want to reward you for savings. So we want to have you open a savings account that's a no-fee account as well. For every month for a year that you increase it by $200, we will pay you $5. So that's another $60 in bonus. And it's not even so much the bonus, but let's think about, so where would I be at the end of the year? Well, I would have a free savings account. I increased it by $200 a month, every month for a year. I now have $2,400 that I've saved for emergency savings. The bank has given me $60. If that was interest, what would that equate to? 2.5%. And I guarantee you're not making 2.5% on any savings accounts right now. Now, what if you have a bad month and you miss a month? Then are you out of it? No, then it just picks up again the following month. Okay. This is our way. This is our savings builder. We want to reward you for building that savings account. Then lastly, we have a no-fee credit card that collects points. Now, a no-fee card, we're going to pay you a bonus of $250. Well, you might think, okay, I got something in the mail from another bank that says they're going to give me $500, $600. Okay, but what's the annual fee on the card? I'm talking about a no-fee card, and your spend, you have to charge $2,000 in the first 90 days, which we know, even if we're just using it for gas and groceries, not going to be hard for $2,000 in the first 90 days, even if you pay it off in full. And we're going to give you 25,000 points that you can use for travel, merchandise, or $250 cash back on the statement. So that adds up to 510. Now, the 660, that comes with, if you're looking for an account that does more for you, if you're looking for something where you might be paying, you would be paying a fee each month, but you're getting a small safety deposit box for free, you're getting free checks, free money orders, then there's a bigger direct deposit requirement, but that's $350. And all of the details are on the back side of the flyer. We were looking at page 1, which is much more exciting because it has all the dollar amounts. Page 2 really stresses everything you need to do. But again, I've got that QR code there so that you can hover over it. You don't even, in this COVID world, you don't even have to visit the bank. You hover over and you can get those services opened for you directly.
And as Lana mentioned too, we are going to have this on the website, on the show page, so that way, if you're watching on YouTube or anything like that, you don't have to squint at the kind of the small text. We'll have this easily accessible for you.
So thank you. I have a couple of minutes left, and with my last few minutes, what I want to do is just do a bit of a recap. So if you are a business, if you're an employer, if you're not currently offering a high deductible plan, now's a very good time to check with your benefits provider, see what that high deductible plan looks like. I've had conversations with some people who say, yeah, but my employees don't want a high deductible plan. But do they really know all of the benefits? Do they know that it is still covering preventative care? And yes, they have a higher deductible, but they also get the benefit of that HSA account. And some people aren't looking at the maximum to put into their HSA account every year. They're looking at actually putting in their deductible. so that they know they have their deductible in there. But when you couple a high deductible plan with a health savings account, and you're never losing those funds, your employees in most cases are going to come out ahead. I know from being in an HSA eligible plan, I would not want to be in any other type of plan. It's helping me save for those healthcare expenses now and in the future. As an employer, you get a break on the costs. Also, as an employer, and we actually through Lively have something that we can run through with you. If you make a contribution to your employee's HSA, you're getting back a tax credit. And so you can even move to the high deductible plan, help your employees by doing a match or a contribution, get returns in tax, and we can even show you what your break-even point is to pay the flat fee for the employer-sponsored plan and still help your employees. Now, I will give you the price for the employer-sponsored plan because we're pretty proud of it. It's a flat $2.95 per employee per month. If you currently have an employer plan, look at it. It's probably anywhere from $3 to $3.95 per employee. So $2.95 is a super price.
So that's probably 35 out the door with trying to do the math in my head. I mean, that's a great price.
It's a great price. And with that, we talked about all the benefits that you're getting. If you're with another HSA provider, you want to talk to me about learning more, I can take you through a live demo with Lively. We can talk about payroll integration. We can talk about all those wonderful things. And I will say in the presentations that I've done, most people have moved over. So that is important. If for some reason you're thinking, I just can't go the employer-sponsored route, still with your individual employees, let's help them out, get them that flyer. I am more than happy. This is what I do, financial education. I'm more than happy to come out or virtually talk to your employees about what is an HSA, why do they want it, how can they use it? Because I can pretty much guarantee that an employee that has a high deductible plan but hasn't opened a health savings account just doesn't understand why they should. And once they understand that, they will open it. If they open it through us, they're getting so many benefits at absolutely no fee for the employee. So think about, are you paying a fee? What's your fee as a business if you are in an employer-sponsored plan? Are your employees having any fee, or are you covering that fee? I talked to a business who was with HSA Bank. Their employees were being charged $5 a month, and they had a fee. So that it was a very expensive plan for them. For an HSA, if you're looking at Lively, again, if you fear the dashboard, don't fear. There is so much help and guidance from Lively to make sure that you're doing what you want to do. Like I said, the share screen to have somebody else, they'll show you where to go. They'll show you how to do it. And also on your dashboard, there's actual videos that you can watch. So let's say, for example, you have an HSA somewhere else. You open the HSA with Lively. Now you need to close that other HSA, but gosh, you got to make sure it's transferred over so there's no tax implications. You're going to open your Lively account. In your dashboard, you're going to put the information of your existing HSA account. Then you're going to, then Lively is going to move those funds and close that account, making sure that it's done HSA to HSA so there's no tax implication. If you say, wow, when I get on the dashboard, what if I don't know where to put that information? I want to make sure I do it correctly. Well, there's a video on your dashboard. So if it's outside of the 8 to 8 hours, 8 a.m. to 8 p.m. that you can reach Lively live, well, you can watch the video and see if you can do it, or you can wait till the following day till you can reach out to Lively. They have, for the employer, they have so much education there with myself and what they can send to employees that you could have your employees have an entire HSA catalog of education that they can go to for different things that they want to learn more about. Again, my flyer with the QR code for the Lively account takes you directly to BMO HSA with Lively. We want you to have Lively and have the safety and security of BMO attached to that. Also, with the banking offer, we want to invite you to join our bank, because we really do want to help people make financial progress. That's our goal. If you're doing better than you were when you started with us, we've done our job. Between our products, our services, and the advice that we can provide, and even having people like myself, who that's what I do, is provide financial wellness programs for businesses at absolutely no cost. So my time is up. It is 12:59. I've enjoyed the hour.
And I do want to say thank you. I know my wife and I were texting back and forth before this webinar started. So, you'll probably see us signing up quicker than ever. And then we'll have you give some information, contact information, best way to get a hold of you, just in case somebody wants to reach out directly and ask your question.
So easy. My name is Lana, Lana Thompson, Thompson, Lana.Thompson@bmo.com. My phone number, direct line, 312-909-2975.
And for those listening on the podcast, we'll have that directly on the show page, so you can check that out. Click a button and it'll plop up an email directly to her. Thank you. I know I kind of cut you off there a little bit on your last statement there. But no, thank you so much, Lana. This has been very informative. Like I mentioned, we're going to be working on this as a family to do it just ourselves. And, we hope that whether you're an employer doing an employee-sponsored business, or you just happen to listen to it and say, hey, this is perfect for me, we hope it's perfect for a lot of people, because it's a great program. So thank you so much. And I know we're going to have you on a little bit later on a couple more webinars. So we are more than happy to, we're definitely looking forward to that. Thank you so much again.
Thank you.
And everybody have a great day. Thanks for tuning in to the Power Hour.